Good morning and welcome to Stock Invest. Today, we are diving into the key market events before the opening bell, focusing on Nvidia's highly anticipated earnings report and what it means for the artificial intelligence trade and overall market sentiment. Last week, stocks rallied sharply after Federal Reserve Chair Jerome Powell hinted at the possibility of a September interest rate cut, lifting the Dow Jones to record highs and boosting investor optimism. This week, all eyes are on Nvidia, the world's largest artificial intelligence chipmaker, which is set to release its quarterly earnings after the market close on Wednesday. Investors are eager to see if Nvidia can sustain the summer rally. Wall Street expects Nvidia to report earnings per share of $1.01 on revenue of $46.13 billion, though some analysts caution the outlook may be slightly tempered due to uncertainties in the Chinese market. Despite those concerns, Nvidia shares have surged 32% this year and nearly doubled since April, making this earnings release a critical test for the tech sector and artificial intelligence trade. The broader artificial intelligence trade has been on pause recently, with the information technology sector underperforming in August. Still, a strong Nvidia report could reignite enthusiasm and lead to a rotation back into technology stocks. Outside of Nvidia, several other companies, including Dell, Dick's Sporting Goods, Best Buy, and Dollar General, will also report earnings this week, providing a broader view of corporate health. Economic data will be in focus as well, with reports on inflation, gross domestic product growth, home sales, and consumer sentiment expected throughout the week, which could influence market direction. Friday's release of the Personal Consumption Expenditures Index, the Federal Reserve's preferred inflation gauge, will be especially important as it could impact expectations for future rate cuts. Powell's recent comments at Jackson Hole opened the door wider for a September rate cut, with markets currently pricing in over an 85% chance of a 0.25% reduction. This shift toward potential rate cuts has driven gains in interest rate-sensitive areas like small-cap stocks and home builders, which have outperformed the broader market recently. Analysts at Interactive Brokers note the market is now more focused on sector rotation rather than outright risk aversion, signaling a potential shift in investor strategy. Thanks for tuning in to Stock Invest. Do not forget to press the notification bell to stay updated on all the latest market news and earnings stories as they happen throughout the week.